Hi, today's focus is on the US dollar reaching a very important decision zone, in my opinion. First of all, though, be aware that this video is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that trading foreign exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar and video is for informational and educational purposes only. By continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Okay, starting with the odd USD weekly chart, we see that price has bumped into a strong resistance layer. As you can see here, tops indicating potential resistance, of course, within this correction, three-wave correction so far. Strong downtrend before that. We got a doji last week at that resistance zone and trend line as well. If we had a trend line like this, you can see right there the price is at that resistance trend line. So last week's doji, I think, could be a first indication that price, and also a bounce off the Keltner band, basically an indication that price could make a retracement or reversal, I think, back to the mean, which could be the long-term moving average in the bottom of this band on the daily chart. If we put a fib from bottom to top, you can see that price could go back to the 38 or 50 fib. That could be an easily, occurrence that could easily happen if you consider the strong move up. Some kind of retracement of that, what is it, 600, 550 pips could happen. We had two bearish daily candles already last week, and if you look on the 4-hour chart and the 1-hour chart, like this, I think that in fact there are 5 waves completed here. There's a potential for that. There could be an ABC zigzag back to the resistance fibs, back to anywhere around 77, 77.15, without breaking this top. If price breaks through the 77.32, then this is not a 5-wave pattern. If it stops anywhere around these fibs and then turns around at the R1 or the trend lines and the fibs confluence there, I think that could be a bearish bounce back down to the targets, minus 272, minus 61.8. But as I already indicated earlier, if it breaks the support line, if it breaks, I should say, basically these bottoms that we see here and these tops and the support trend line, then there could be a move back down to the mean on the daily chart right here to the fib and the long-term moving average around 75, 74.50 on a 4-hour chart. Back to the 4-hour chart, you can see if we break the support trend line, there could be a continuation like this, maybe another bear flag, and then a follow through one more time, for instance. All right, so that would be the long-term target, 75, 74.50. The 4-hour target, as you can see here, is around 76 upon the break of the blue line. If that does not happen, and price on the hourly chart rather breaks through with a lot of momentum here, and we see in fact bullish candles, and I see a bull flag like this, and a break of that bull flag, well then in that case there's a good chance that price will start to break through this top. And so I'm keeping an eye on how price moves up here as well, and the reaction to the fibs. All right, the reaction to the fibs is going to be very important, because if it's too choppy, it's probably not a bearish reversal, and it could just be a uptrend continuation. Let's face it, 4-hour showing a strong uptrend, daily too. It is not a guarantee that price will use this resistance zone immediately for a retracement or a reversal. It could still push up one more time and test 77.50 or 78 a bit higher. Now more on that today in the weekly recap with Nenet. We got live webinars on Tuesday and Wednesday, price action and patterns, Fibonacci and waves, and a live trading session with Nenet. Thursday we take a look at trading with pivot points, an educational webinar on Thursday evening. Hope to see you in one of or all of these webinars. Now regarding the euro dollar, we're looking at the 4-hour chart. Of course, the 4-hour chart had a grand bear channel here, but price broke above that with momentum. So what I'm looking for is basically an ABC zigzag up to the minus 272 or the minus 61.8 target, 107.25, 107.75. A break above this top would invalidate the bearishness I'm expecting. If it breaks above that, then something else is going on and there could be a bigger bullish correction. As long as price stays below this top, I think that this is just an ordinary ABC zigzag or just a normal ABC zigzag, and there could be a bearish turn at this zone for a continuation of the downtrend. Now, will price bounce at this 50 fib? Price already stopped at the 50 fib here. Or will it retrace to the 61.8 fib and the lower part of the Keltner, or even the 78.6? Those are all possible. Any of these fibs could be bouncing spots for that ABC zigzag, as long as price does not break this bottom at 105.20. If it does break that bottom, the ABC zigzag is not taking place, and the downtrend will continue most likely. And this was already the completion of the correction, and price could then continue lower. To what levels? Let's take a look at the daily chart, and you can see that, of course, if this bottom gets broken, you still have 105 support level, round level in the way. But if that breaks, then you go towards this bottom. The euro dollar could fall and retest that bottom and continue. If that bottom breaks, of course, then the downtrend is back into motion, and the price could go down to 102.50 and perhaps parity. So let's see, very important level, of course, 105.20, this bottom, this top, and also these fibs and these support levels, because that's where I expect the bounce, and the bullish bounce and the bearish bounce. So let's see if that happens indeed. But that is my best guess of the market structure when looking at waves, that this is what I'm expecting for this particular week. Pound USD is in a triangle, but the bullish waves indicate that I think more bullishness is to come on the pound. So that's a bit different than the euro dollar. Euro dollar looks a bit more bearish at this moment, although a retracement higher is, in my opinion, likely at this point. But the pound is suggesting more bullishness than the euro, in fact, because it is a triangle after momentum to the upside. So if it breaks above these resistance trend lines, there could be a retest of 127 and perhaps even a continuation up to the minus 272 target at 129. If it breaks support levels, the support trend lines rather, then there could be a fall down to the 61.8 fib. As you can see, price stopped at the 50, so that would be the next target at 122.50 if the blue lines break. If the blue lines hold and price breaks above this inner small trend line and the pivot point, there could be a bounce back to resistance and a continuation of this triangle. And once those trend lines broke, I already talked about it, then there would be a bigger breakout potential to the top. So let's see how price responds to these levels, if it breaks the pivot point or if it breaks the blue lines, and then how it responds at this resistance zone at around 125. All right, so that is basically what's going on the pound at this moment when looking at the waves, the fibs, and the chart patterns. Taking a look at the dollar yen, last but not least, I think that price, if I move the mini terminal here, very useful for trading purposes, taking and entering trades, calculating the risk management. It's part of the MetaTrader 4 Supreme Edition. Definitely check it out with admiralmarkets.com and go to platforms. If you look at this correction on the daily chart, you see that price bounced at the 38.2 fib. There was very strong momentum to the upside. I think that this could be a continuation bounce of that strong momentum. If price fails to bounce at the 38 and breaks below it, then in that case, the bullishness might have vanished, might not be there. If price holds and bounces at the 38.2 fib and continues with that bullishness, then I think the dollar yen and the dollar itself is in an uptrend. So very critical to see how this dollar yen responds, because it will give us information about how strong the dollar is. Is it really back in an uptrend? Is it really going to continue with the upward motion that we've seen last year? Or is it going to fail? And is it going to basically continue with this correction or even reverse? I think the dollar yen will say a lot about that, because if it breaks through the 38.2 fib, it looks like a retracement or reversal. But if it breaks above resistance, then there's a good chance of an uptrend continuation on this dollar yen, but the dollar as well. On the 4-hour chart, let's take a look at how price responded to the 38.2 fib. And you see that price has built 5 waves so far. And therefore, I think an ABC zigzag, either it's been completed or still to, that it still takes place and to continue like this, as I indicate here, A, B, C, could occur. But whether it's, wave 1 and 2 has already been completed, or the wave 2 has to still be completed, point is that as long as price stays above this bottom, it could still be that one wave 2. If it breaks below that bottom, that is invalidated and price should fall down to the 50 fib I talked about just a while ago. If this 1, 2 waves hold, then I would expect a wave 3 to eventually break the resistance trend line, eventually break this top, and head towards these targets with a lot of momentum. So very critical to see how price responds to this bottom, of course, to these fibs, and to these resistance trend lines, and how far it could push towards these targets. That's what I'm keeping an eye on for this week. Wish you all great trading, and don't forget to check out admiralmarkets.com/MetaTrader 4 Supreme Edition. Tons of extras there. Also, of course, analytics and webinars. Wish you all great trading. Cheers.